Cash is king or queen, whichever you prefer. I'm here to talk about what that statement means. However, most importantly, what it means for you. It's important to remain liquid during these contractionary times because challenges always bring forth opportunities, and we want to be able to seize them when they arise. Every dark time is followed by a brighter time ahead. So it's important to remain positive. I've been a serial entrepreneur the past 25 years, and I've, as a business owner, lived through some great recessions, 2000 and 2008. And during those times, it was difficult, very difficult. However, afterwards, there were plenty of opportunities, and my businesses ended up growing. But it's important to stay liquid. We know that there have been rate hikes, right? Rising rates. The Fed has hiked rates at the fastest pace it has in decades. We've gone up over 4% the past year. So we have a higher cost of debt and capital. That means the balance that you carry on your credit cards come at a higher price. New mortgage loans are at a higher rate. Variable rate loans are higher. So it's important to be mindful of that. Reducing debt is key. Reducing expenses is key. We have money inflows, money outflows. If we reduce our outflows, our expenses, we widen that margin and we get to keep more. We don't have to increase that incoming money. And that's a big misconception. Everyone's like, I need to make more money. Well, actually, if you decrease your expenses, then you can keep more. And it's always about what you keep. We know risk-free rates are higher than they've been since pre-2008. What's that? Those are the treasury bills. They come at a risk-free. So if I can get 4.5 to 4.7% in treasury bills, while the earnings yield of the S&P 500 and NASDAQ is lower, to me, that's a safer bet than putting my money in a riskier asset, the stock market. Prices and valuations should come down accordingly. We know we have reduced productivity, right? This is a year of efficiency. We need to be more efficient, streamline our operations, and streamline our expenses. We want to reduce expenses. So there's a dilution of value, and that's what I call it, a dilution of value. That means we get less output for every input. We have a higher cost of production, higher costs of labor, and once again, higher cost of capital and debt. So it costs me money to take out cash. Banks are also tightening their lending standards. Of course, they want to reduce risk. So it's getting harder to get loans. And these loans are at a higher rate, which means cash is king. So we want to remain liquid. We want to reduce expenses and remain positive, a positive mindset. A positive mind creates a positive life. There will be brighter times ahead. Now, one thing we know is that history doesn't repeat. However, the one similarity that we can pretty much be guaranteed is that it will get better. It won't stay this way forever. There are brighter times ahead, and opportunities are incoming as challenges bring forth opportunities.